Good evening, everyone. I wanted to do a quick silver update. Back to our same old chart. We are still underneath our trend line. This is not the modified trend line. This is the old trend line. I want to put that up because it is forming up as overhead resistance as far as price action goes. We didn't see a move that I was expecting, the MACD crossing over the zero line. As you can see, it did not move as this move did, but is actually starting to round off. That's not necessarily a negative. I was hoping for a straight move all the way through the 0 point, all the way to a new high. It appears we're rounding off. We could round off and go down, which is going to put us in a more oversold condition. Wanted to move it out to the 8 hour so we can see it has crossed over on the 8 hour and is moving up into the positive. But when we go out to the daily, we're still falling down to the zero line. Now we could round off and go up from there, or we could continue on down to the zero line. So when we look at the daily, it looks like it's still not. It's still in the overbought territory, but it is consolidating back down to the 0 point, and if it continues falling, it may reach the 0 point or even oversold. It doesn't necessarily have to correspond with the price per se. The price, as you can see, the MACD can move in a divergence. That's actually what we're looking for in a bull market, because your buy points are going to be marked by you're buying the dips in a bull market. So basically your MACD indicator is going to be accurate. The dips will be accurate in a bull market. The peaks will be accurate in a bear market. So let me give you an example here. Okay, let's say that we were trying to sell silver and we're trying to make a profit of it going down. Okay, so you see our crossover we have right here. We'd sell that. Now, if the next crossover is higher, which it is, then the signal's not working. We got another cross here, but it's higher. Okay. So the peak sell signals are not working for this market. We've got a sell signal right here, but we're down to here already. And how much has the price fallen? Not much. Not much at all. So that's what I mean when I say that the in a bull market, the MACD crossovers up work, and in a bear market, the MACD crossovers down work. Now let's look at the crossovers to the upside. Okay, we had a buy here, right? Our next one was here. Is the price higher? Yes, it is. Okay, we got another one here. Is the price higher here than here? Yes, it is. How about here? Is the price higher here than it was there? Yes. And so it goes. So now if we cross here and start going up, that's going to be another crossover buy signal. Is that going to be at a higher level than the last one? Yes. So clearly we're moving in a bull market. The MACD is indicating the buys as it crosses over. But remember, there's different time frames for those, so you have to take them out. Now if we go all the way out to the weekly, you're going to see it appears totally overbought and due for a crash. So it just depends on which perspective you're looking at. The stronger the market, the earlier the MACD crossovers will begin to take hold. So for example, right now, as we're looking at the 1 hour, we appear to be crossing over. Now this is a really, really strong market technically. You very well could see this MACD cross and us move higher into the 30s. But you could also see it round off and head down. So it's just sort of an indication of how strong the market is. But again, it is a bull market. You want to buy on the dips and when they cross over to the upside. Wanted to address a point that one of the subscribers brought up about my pointing out about buying different coins, and I just wanted to clarify. I had spoken about the koalas, and some people take an issue with whether you should buy, coins with numismatic value. I have a number of considerations that I consider when I look at a coin. I want a coin to be one, very unique but identifiable, so that at some point when I sell it, because I'm looking at different points in selling it. I might be looking at selling it next year. I might be looking at selling it in 5 years. I might be looking at selling it when silver's $1,000 an ounce. It all depends on when I'm looking at selling the coin. Now, the reason why I brought up the koalas is because at the time that I was purchasing them, and I wanted to give you an example because these are actually two coins that I purchased at the same time. I purchased these 2009 koalas, and I purchased these 2000. This is 2010 in the picture, but it's a 2009 Buffalo round. I actually purchased them at the exact same time, and one of the reader's points was that you want to buy the coins with the lowest premium, or even bars. And I'll have to talk another time about the bars and why I disagree, and I don't like bars. But just as far as the coins go, I wanted to take these two coins and do a little analysis on them. These two coins were both purchased in 2008, fall of 2008. This Buffalo I purchased for $12. Now, you may say, well, that's an incredible premium. Yeah, I did. I bought it when silver was under $9. There was a $3 premium on it. That's not unusual. Those guys don't want to sell at a loss. I mean, they will, but they don't want to. So sometimes you'll see those premiums not follow the market down, especially in spectacular moves. Now, this coin I bought in the fall of 2008 for $12, and this coin I bought at the exact same time for $14. Now, as you can see, this coin is selling on eBay for $32 plus $269. I just did it as $34. And this coin is selling for $46 plus $650. I did that as $52. Left 50 cents or so for shipping. And just added that in because you'll see that these shipping are higher too. But the person's pocketing that. It costs the same thing to ship this coin as it does to ship this coin. So, and when I add these together, I've got one coin that went from $14 to $52, and I have another went from $12 to $35. Now, you can see the return on the koala is actually higher than the return on the Buffalo. So it's not always the case that a bullion coin will or just a standard generic bullion round will outperform one of the mints. And one of the reasons why is the numismatics of it. And so there's a number of factors. Of course, this is a much more beautiful coin. It also happens to be, well, it's $1, but it also happens to be a real money in a country. In Australia, it's money. And it's rare. And so I don't really see any reason, if you have a lot of those factors going together and the price difference is $2, that's one of the reasons why I made that decision. Now, I bought a lot more of these than I bought of these, but I bought them both. And so that's an example where it is not always the case that the numismatic round, even though it's more expensive, doesn't keep up. Premiums can actually widen faster than the premiums widen on a just generic round. But again, it has to do with your time horizons, how long you intend to hold it. Now, certainly, if silver reaches $1,000 an ounce, I would expect that the Buffalo will turn out to be the most profitable coin. I may be wrong, because there very well could be a $300 premium on that Perth Mint round. So it could be a total collector's item. Don't know. We'll wait and see. But right now, at this stage in the game, the koala is ahead of the generic round. So anyway, just wanted to point that out. Not a lot going on. We're hoping to get through 30. We'll see if we round off and turn down for a little bit or consolidate and then go higher. And we'll talk to you next time.